Welcome to Bar Charts Market and Close. I'm your host, John Rowland, Bar Senior Market Strategist. Last month's candlestick looks like a hanging man and has the rally run out of rope. What is the yen carry trade and why is the world's favorite funding currency might be at risk? Insider buying on DoorDash, Bitcoin's winter might end if it can spring above 96,000. And when can a package on my front step give me a trade idea? All that plus your questions, and to help me out as always is Bar Charts Twitter Tom and R Mr. X. Hello, Thomas.
Hello, John. How are you?
Good this week. I had a nice week this week. I'm very happy with a couple of my calls, and maybe we'll get to look at a couple of them before we finish today's session.
Yeah, I am. I had a good trade. Actually made it yesterday just before the bell. It's actually going to be part of our show today, John. It's going to conclude it. So excited to talk about that as well as many other interesting topics. But before we jump in, just want to give everybody a quick reminder. If you're watching directly on our website, you want to ask a question, just click ask a question at the top right. You'll see it in the orange color. And then if you're watching on our social channels, just go ahead and leave those questions in the chat. Leave a comment. John and I will get to as many as possible. So, John, I'm going to date myself a bit here, but when I was a kid, I used to play a game called Hangman. I'm sure maybe you did too. The goal was to guess the letters in a word before your guesses ran out. If you did it first, you won. If you didn't, if you ran out of guesses, you got the hangman, symbolizing your end. Now, I had no idea that many years later, I would be talking about the same thing, a hanging man, potentially signaling the end stock market bull run. But that's exactly what happened in the Nasdaq. We got a hanging man candle on the monthly chart. John, there was a lot of debate about this last week on Friday after the close. A lot of people saying this is terrible. A lot of people saying it doesn't matter at all. So for this, John, I think we're going to turn to you for your sage wisdom. What have you got for us on the hanging man?
Yeah, let's get there we go. All right. Okay, so let's talk about just from a textbook aspect. And the textbook that I'm going to reference is Steve Nison's book on candlesticks. So there are characteristics. So let's see how many we can check off for a hangman. And the candle that we're talking about is this red candle right here, just for reference. And that is, this is a monthly chart, and this is the month of November. Okay, so it has to appear after an established uptrend. Yep, I think we can say that. The real body is small. Now, Nison didn't characterize the size of the body, but in more modern CMT, we want to see it like something like 20% of the range, or at least the wick or the shadow to be 2 times the size of the bottom. And I think we could say that that would fall under that. We want to see a very long lower shadow. Again, we got that. Little or no upper shadow. I think there's a little teeny one there, but not much. And, we want to see, we want to kind of see a volume surge. And we did see a bit of a volume surge on a monthly basis. Now, the color of the candle itself is not relevant, but a red candle is a little bit more significant. And then the final one, that this candle by itself is not a reversal candle. It must be confirmed. And that's what Nison was saying. And so how do we confirm this candle? Well, the next candle has to close below the body and preferably on increasing volume. Well, do we have that? No, we don't. Now, we could see a gap down, and which is hard to tell here because this green candle opened here and this red candle closed there. We did gap down, so that would have been encouraging if you wanted to call that a hand, but you can see the market has rallied since then. So we also want to see in this candle here is we do want to see some increasing volume as well. Now, what makes this a difficult to call, Thomas, is that this is a monthly candle, right? And, the end of the year is weeks away. In other words, the December candle is not going to close for, maybe another, 20 plus trading days. So, if this is confirmed, right? Let's say we do get a red candle here. then that would identify a trend reversal. Now, Thomas Bukowski had in his work, he talked about, or he looked at a lot of different chart patterns, and he did a lot of statistics on it. And what he discovered was that in hanging men, that you get something that is called a 6-candle reaction. In other words, about 5 to 6 candles post hangman, you get a follow through, and in late stage trends, you get a move around 3 to 7%. Now, he worked in days, and we're working in a monthly, so that would probably distort that percentage. Now, targets, well, we could look at a most recent swing low. Now, if I'm in a monthly candlestick, the recent swing low is all the way down here around 402. But I think we could go into, let's say, weekly swing lows, and that the nearest weekly swing low is around 560, 550. Another thing we can do is we can measure the lower wick and then extrapolate or subtract that from when the market breaks the low of that hangman candle, and that currently is around 39 points. So that would put us around 541, which would be inside this pink box. Now, which is interesting about that is if I drop down to a lower time frame and I go to that pink box there, you can kind of see it. This is one of those gaps, right? A value gap that we've identified multiple times before. Excuse me. So right now, not there, right? And because we got a long time between now and the end of the month, we might have to sit on this. But there is a theory about candlesticks and about markets in general, just called fractalization. In other words, that patterns repeat, or that you'll find similar patterns throughout all time frames. So because we're in a higher monthly time frame, higher time frames influence lower time frames. So we could look for clues in lower time frames. So if we go to the weekly level, and let's do this. Let's get rid of volume so we don't need that anymore. And actually, you know what? Let's go to just a plain chart here and go to a weekly. Let's do this so we can get a nice big picture here so we can look at this. All right. So what can we look for? So first of all, just on basic charting analysis is, we probably would want to see our weekly candle to fall below the body, halfway through the body of the monthly candle. And that is represented by this blue line here around 608.25. So we're not there yet. The other thing we want to start seeing is some shooting stars or gravestone dojis, or maybe even a bearish engulfing. Again, at the weekly, I don't see that. And something else we can look at from a technical aspect is we could go into, our momentum indicators, our MACDs and our RSIs, and see if we see a change in them. Now, maybe we could make an argument of a little bit of a negative divergence, but, we still yet have to make a new high, so we could see the RSI still go up. And certainly I don't think the MACD here looks like it's rolling over just yet. That's certainly some strong momentum. Now, if I go down to the daily time frame, then again, what we could talk about is looking for a break of a daily swing low. Again, I think that, on a daily level, where did the market stop going down and start going up? Well, that was the bottom of our hangman. But maybe we could make a case, this week, a new weekly low, let's say below 619, or even here around the 615, 613 level. Also, I would like to see, an increase in volume. And again, we might not have seen that as of yet, or we could look at our advanced declines issues and shares and see that leaning towards bearishness. And again, we might want to see some evening stars or some bearish engulfings. Now, what is kind of interesting though today is, we're getting into this gap here, which would represent a level of resistance, and we are getting a doji-like candle. So that could be something for us to look for. But again, we look at a lot of time. And the other thing I want to start seeing at the daily level is an appearance of more upper shadows. In other words, selling pressure in a lot of our candles. But, a lot could change between now and then, Thomas, because we got about 3 weeks to go until Christmas. But for now, I would say your hanging man is in question.
A lot of good data points there, John. One other data point that I think is kind of interesting. Obviously, this segment focused on the Nasdaq, but S&P 500 has had an incredible run as well. 7 consecutive green months, going for its 8th consecutive right now in December. Here's the problem, John. That's happened 5 times since 2009. And 4 of those 5 streaks ended with the 7th green month. They did not continue. Only 1 continued. So, if you're a bear and you're trying to figure out whether December is going to be green or red, that's a pretty strong case in your point. But I think you've seen maybe some things happening that point more towards the bullish camp.
Yeah, I think what we can start looking for, and this is a webinar we did this week, was on market breadth, is what I've noticed in a very short period of time is that the breadth has actually turned quite positive. In other words, momentum has been spreading out through the whole market, and where we had what we saw a narrowing breadth, which we had been warning for a while, just in the tech sector, is now kind of, spreading out. And what I noticed is, like, we talk about the 50-day moving average, and there's only 4 of the 11 sectors that are below the 50-day moving average. The other ones are above. That's a strong increasing breadth, even though some of them, for instance, like materials, is still below its 200-day moving average. And again, if we do it based on a 200-day moving average, it's about, 50-50, just leaning a little bit favorable. But the one thing that I really think about breadth is, I want to see it through all of the market. And, we've talked about this in the past, and that is a lot of times when we come out of, maybe a bearish or a correction, or we're looking for leadership, a lot of times new bull legs are started from small caps. And what is really kind of interesting is we look at small caps. Here's the IWM. There's a hangman. That's a hangman for sure. But where are we doing now? We're really right on the cusp. And this is a monthly candle on the cusp of making a new all-time high on this one. And then again, if we go on to the weekly level, we're right there. So again, that is a sign of strengthening breadth, and that is a good sign for the market, which could carry us through Santa Claus rally and into the beginning of next year, because next year, then we're going to get some tax cuts, and maybe the consumer will see some relief. And so those could be positive things for the market moving forward.
All right. So that's evidence for the bulls, John. Unfortunately, we have sort of a big story happening this month, which could be seen as bearish. And that's the idea of the Japan yen carry trade. Now, this is a topic that comes up occasionally, and I get the sense a lot of people may not fully understand that, John. So it's a strategy where investors can borrow cheap yen, because Japan has long had historically cheap interest rates. And then it allows those folks who borrow cheap to go and invest in assets that generate a lot stronger returns, a la the United States stock market, right? A lot of these high-flying stocks. The question, John, is the BOJ is currently probably going to raise rates later this month. I think last I saw there was an 80% chance of a hike. It looks like the Fed is going to cut their interest rates. This strategy, John, was cited as a big reason why tech stocks flew higher this year. could it work the reverse? Could this blow up and then maybe derail the stock market run?
Yeah, this has been a global financial strategy that has been used by hedge funds and institutions for years, almost a decade, right? And like you said, this idea of they borrowed a cheap currency and then they invested into an asset that's going to increase in value. U.S. Treasuries were yielding more, but you could think about tech stocks had been rallying, and even in commodities, you could even talk about the gold space. And then when when the trade comes done, you unwind the trade, you sell back, you sell out your tech stock or whatever, and you make money, and then you return the yen. And this works beautifully as long as the yen is stable or is weakening. And you can see that, this is a weekly chart of the US dollar versus the yen. And the higher this price goes, it means the dollar buys more yen, means the yen is weakening. But you can see that we're coming up against a level, and I think this is kind of what, to your point, is we're coming to a level where we've seen the DOJ intervene on the behalf of the yen, not letting it get too devalued. And so we're getting closer to that. So I think that's kind of maybe the catalyst, what you're talking about. So if they do unwind, right, or if they are forced to wind, that might come from a catalyst. And that catalyst, like you said, would be a change in their banking policy. And then what happens is, because a lot of these trades are leverage trades, then very small price movements in those other assets that they bought could amplify, potential losses. So as they unwind, right, then that kind of creates a chain reaction, right? A kind of a daisy chain or domino effect with volatility spikes and things like that. So yeah, I think that is something that we need to be aware of, because what we're really talking about is this could become a giant global margin call. We saw what happened in the margin call with Bitcoin just a few weeks ago. Imagine that on the global scale, right? I mean, that would be, really a bad scenario. Now, I don't know if the BOJ catalyst would be enough to send this unwinding of the carry trade, but you could have some kind of global events, right? Maybe a heightening of a war or a new war or something. I don't know, in that respect. I have a friend an old currency trader who told me that the yen is called the currency of misery. And what that means is that when there's uncertainty in the world, when there is risk in the world, in other words, risk to markets, that money flows into the yen. And so that could be a catalyst for us. So, underneath this, Thomas, what I'm more concerned about is if Japanese treasury or rates go up, that makes their treasuries more attractive. And Japan has been its third largest purchaser of U.S. treasuries. So that means that traders might be buying yen currency derivatives or assets and not buying U.S. treasuries, which would lower our U.S. treasury prices, which raises our rates, and a widening of, let's say, long-term treasury yields would be a headwind to our stock market. And I looked before we came, and I believe yields jumped today, didn't they? Long rate yields.
Yes, it did, and they have been jumping. They have been jumping for quite a while. So yeah.
So I mean, the 10-year was below 4% just briefly, and now it's back up to like 4.15 or something like that. So that is, I think, if for somebody who's watching at home, that's what you got to watch for, is right. Does the yen devalue? Does this rate fall? And do we see our long-term treasury yields rise? That would be a concern for me.
Yeah, currently the U.S. 10-year currently 4.14. It got as high as just about 4.15, John. So
right, if we get back above 4.5%, that could be that catalyst that we were afraid of, that unwinding event.
All right, so let's switch gears to a bullish story, John. I think it feels bullish, and that is an insider trade. Now, a lot of times the insider sales, those make the headlines because they're usually big amounts. But there's an old adage, John. There's a lot of reasons to sell, but only one to buy. So this transaction caught my attention, which is a DoorDash insider buy. John, I think this might be the first time we've ever talked about DoorDash on Market on Close.
I think it is, yeah.
But Alfred Lin, who sits on the DoorDash board of directors, and also he is a partner at Sequoia Capital. And if you haven't heard of Sequoia, they are one of the largest names in venture capital. He just bought $100 million worth of DoorDash, John. That's not a token investment. That is a confident. No. That is a confident purchase. So,
very confident purchase. Yes.
Does this make you confident enough to go and buy DoorDash yourself, John?
I don't use a product, but I know we were in our production meeting. We were talking about that. You said that you use it, and some of our other staff were saying that they use it. Matter of fact, there was one of them said that they used it 3 times in one day. So, yeah, I mean, I think the fact that it was $100 million trade really tells you something. Now, I actually looked this up. That the last time this individual bought was back in 2022, and they purchased around $87, and I think it ran up. Let me look at my notes. It went from like 70. It bottomed around $75 and then ran up to $130, which was about a 70% return. So I mean, Thomas, I think the fact that this was a huge trade it really does give us permission to kind of start looking at this one for sure. And again, I'm looking at this from just a purely technical standpoint. Notice how not too long ago, we're only talking about October 16th, this stock was trading $280, and I don't know why it fell. Maybe it missed some earnings. So it had a precipitous fall, but it fell 36%. But notice that in this comparison to the S&P, which is right on near all-time highs, it is starting to outperform the S&P. That's a positive sign. And, one of the things that we always love to talk about is the 200-day moving average. And we've recaptured the 200-day moving average, and we're into a gap. So that means that we could probably rally up, and notice where our 50-day moving average is right on that gap. So, investing in this one, maybe, yeah. Certainly this would be a trade I would be looking at, buying it here just above the 200-day and look for that gap fill to the 50-day. What do you think?
Yeah, I mean, it's hard to argue, right? I mean, it just recaptured the 200-day. The last time it did that, it went on a huge bull run, John. And you point out the gap fill. We have one user, John, who says there could be a inverse head and shoulders forming. Do you see that on your end?
Not here on the daily. I mean, I really would like to see more of a shoulder here, but what I do like is, and this is more of fractals, this is what it's called as a drop base rally. And then we have this nice gap explosive rally that takes out all of this trading right now. I'm not saying there's a lot of shorts here, but this is kind of a capitulation. And then now you're well above that. So again, you can think about things like, technical analysis, look at our average true range and see how much we've gotten above that. So our average true range is about $9.50, $9. So we'll say above $15 from that recent level of resistance. If we are above that, and I haven't done the numbers on this one, but yeah, look at, so that would be 216 plus 15 would be 230. That would be my confirmation. If I could see this above 230, then that would be a really good sign for it.
All right, John. So let's move to your favorite asset class, and that is, of course, Bitcoin. Now, we've covered Bitcoin quite a bit over the last few months, unfortunately, for not the best reasons. We've talked about potential bear markets and evidentiary data points to suggest that, yes, Bitcoin has entered a bear market. However, we have raised this idea, John, of a potential counter trend rally occurring at some point fairly soon because Bitcoin has just gotten hammered so bad. And I think you have found some fairly compelling evidence to suggest that maybe Bitcoin has bottomed. What have you got for us?
Well, we've talked about this chart pattern before, and this is a chart pattern that I love finding. It's something that I've traded in my career. I've lived this chart pattern, and what it is called is called a three candle crash, a three candle drop, or a picture of a crash, and you can see it. It's this cascading self. Now, this is a weekly chart of Bitcoin. Here you can see 1, 2, 3, cascading. Right, each candle is getting increasingly larger, and this is kind of a sign of sellers overwhelming the market, and then a final capitulation. Now, this is not a selling opportunity. This is actually a buying opportunity, but there are some conditions that we need to be aware of. The first one is that after the crash, we need a green candle. We need a green candle to close. That is a sign that the selling is done. The second thing we need to see is that we have to get above this green candle. That's the buy signal, right? And you can see that there was some encouragement to this beginning of this week. We were above that, but we are below it now. And then if that does happen, then what we can do is we can look at levels or targets or levels of resistance as kind of milestones or posts for the market to go. And the first one would be where the two candles break, which would be this level right here, 1, and that area is between 94,000 and 96,000. So to me, if we could get Bitcoin above there, that would be a very encouraging sign. Now, that's only the one of the levels of resistance. Then you have this target here between these two candles, and then 3, the origin of the move. If we could get above there, then what we can do is we can extrapolate from peak to trough and add that to peak to a projection, and that comes out to about 141,685 there. Now, I want to just kind of show you that you're going to find these three candle drops in all time frames. Usually you find them in intraday time frames. This is not really a crash like a 1929 crash. It's just how the market kind of cycles where buyers and sellers overwhelm each other. But you can see here is one that goes back, I think this is from 2022 or 2019 in the S&P, and there you can see 1, 2, 3, there's our crash, there's our trough, peak to trough, and then you can see how we extrapolated once we got above there, how that target was achieved. We had a kind of a janky one back in April of this year in the S&P, and again, we set this one back up, and I know in May, and that one worked out really well. So this is a trade that I live and breathe and I believe in, but the problem is that we didn't get that follow through today. Now I would give this about another week or 2 weeks. So the contra here is if we fail to get above the first level of resistance and we take out the low, then that will confirm this downtrend. And if I'm looking at that in terms of Bitcoin, well, the first level I see is around 69,000 to 63,000, but the first really fresh level of support or demand zone I see is way down about around 43,000. Thomas, what do you think about Bitcoin? I know you're kind of nervous about this one, but
well, I was gonna ask you, John. So if Bitcoin does strengthen here and gets through that 94 to 96 level, what do you think is the best case for Bitcoin over the next few months? How high do you think it could go?
Yeah, I think this is that whole adage about bears take the elevator and bulls take the stairs. I think you could see a 2 or 3 month rally out of Bitcoin that put us into the spring of next year. Think about QE. We're cutting interest rates and QE. That's a tailwind for Bitcoin. And again, that if we do that extrapolation, that would project out to $141,000.
Yeah, I mean, listen, I'm still holding my Bitcoin position, so I love that idea. I personally would give that about a 5 to maybe 4% chance of happening. If that were to happen, in my mind, that is the absolute top of the cycle, and it threw us for a bit of a loop by coming down and then reversing back to 140. But I would consider that the absolute top, and I would be running for the hills, John, if that happened.
What we need Kalshi to give us which to come first, 141 or 69, 63. And I think if you could get a 5-1 on that one, I would take the upside on that trade.
Yeah, I mean, if you ask me what's more likely, 140 or 60, I'm probably going to go with 60.
Yeah, I agree with you on that one. So this,
right.
Again, this is not endorsement. This is just something to watch, and this is a pattern I want you guys to start watching for, because when you see this pattern, when it works like clockwork. Okay.
All right. Let's move to our last topic, John. Again, this one is going to be another bullish idea. Now, Big Short investor Michael Burry. He takes a lot of criticism, John. He's made some bad calls. He's always early on things. He's probably going to be early on this. But in fairness to Michael, he seems to have done a lot better with some of his long ideas, John, his bullish ideas. I remember he chose Estee Lauder a few quarters ago, and that one did really well after that announcement came out. So he's bullish on Lululemon, John. Lululemon. The stock has gotten hammered. And that might be an understatement. It's just gotten absolutely destroyed. It's not a stock I've looked at to invest, but now that Burry is bullish on it, I took a second look. I took a fresh look at it, and I like it. So this is the trade that I said I got in yesterday, right before the bell. Bought a tiny bit. It's done very well today, so I'm obviously happy about that. Here's the thing about Lululemon, John. Burry says, buy it, forget about it for 3 to 5 years, check back, prices will be higher. I love that kind of conviction because that's something I like to do with my own portfolio. I don't like to worry about the intraday movements. What do you think, John? Are you with Burry on this one?
Yeah, I actually, I wanted to tell you a funny story is that, my wife and my daughters, they love these leisure wear clothings, right? But, they never really liked Lululemon because they always said it was too expensive. Matter of fact, when you go to like these outlet stores, they go, like, oh, you want to go to Lululemon? They go, no, it's crazy. It's too crazy. It's too expensive. Well, American Express just recently, for American Express holders, they give you a Lululemon credit. I think it's like, X amount of dollars every quarter or 2 times a year. And the other day, the packages are piling up on the, Christmas packages are piling up on the front door step. There was a package there that said Lululemon. And I go to my wife, I said, I thought you hated Lululemon because it was too expensive. She goes, no, American Express gives me this credit. It's like free money. I love Lululemon. So that kind of got my brain going. And so here, put up my chart here. I went and looked at the stock, and yeah, it's kind of had this big fall, but I love this kind of bottoming, right? Multiple lows here, 1, 2, 3, 4 lows, but in the last year, you got this nice little W pattern, and maybe you could even make a case for a cup and handle, and that our 20 and 50 day have turned positive. So what I did is I actually, I was like, I respect Michael Burry and the fact that my philosophy about trading or investing is just observe what's happening around you. And so if my wife loves Lululemon, I got to love it too. And so what I did was I did a little bit different. I bought this more as a trade. I bought the Lululemon and then I sold some calls. I sold a 220 call. I think I got about $5, which represented at the time about 3% of the stock price. And so, yeah, I'm sitting on something that looks like it's moving. Now, I would be a little concerned with this little gap here right between 198 and 206. But, again, are we going to trade this or is this an investment? And it certainly is. This looks very strong to me. We could get closer to, let's say, that 200-day moving average, which puts us up around 235. Again, I sold the 220 call, and if I get exercise, I'd be very happy with that trade. I think that would be a 25% return on money, and I don't know whenever that would happen. And then what's nice about this trade now is I got $5 of credit that I can use as a protective stop. So I'm going to stick with this one as well.
Yeah, I like that. And John, you gave me that idea yesterday, and I joked with you that when I was going to make the trade, I thought about it, but then I realized, you know what? I don't want to drop $18K into a clothing retailer just right now. Maybe I'll build up to that, but I didn't feel like I wanted to do that.
Yeah, yeah. Well, what's funny is that we talk about a lot of the trades that we put on, and again, this is ideal between investing and trading. And sometimes there's this blur, right? This line gets kind of blurred where, normally I would not invest in a stock like this because it's below its 200-day moving average. But to your point, you're saying, well, if I always did that, I'm going to miss out on some potential gains. So this is kind of a cheap way to get into an investment by doing these calls. Because what I would love to see is the market this go all up to 220 and the call expires worthless, and then I'm in that position, and then I could do that over and over and over again, right? That's kind of what we want to do, right?
Yeah, exactly. Yeah.
All right.
All right.
Time for some questions.
Time for some questions. Guys, if you guys are watching on our social channels, as always, John and I would be super grateful if you share it, retweet it, leave a comment, tell us what you liked, tell us about your favorite investment ideas. We love getting the feedback from you guys. And also, before we sign off today, John, we're going to give our listeners, a schedule update because our December schedule is going to be a bit wonky, but we'll give you guys details before we sign off. So
make sure we do that.
All right. Let's see what we got here, John. 3-candle indicator, is it as reliable for daily charts as well as weekly charts?
So, I think that's Matt there. Yeah, Matt, listen, you're going to see it at dailies, right? That's really where I like to find it. But look for it in, let's say, if you're a day trader, that's kind of the world that I came from. But 15 minutes, 30-minute time frames, 1 hour time frames, 4 hour time frames. But you're more likely to see it in dailies and intraday time frames than you are in weeklies and monthlies. But when you see them in a higher time frame and they do come to fruition, they're big moves. I was trying to do this before the show, and I remembered one of recent. It was a weekly one, but I couldn't remember what the symbol was, and so I apologize on that one. I didn't get that one, but yes, I would look at it.
John, how often do you refer to or use the COT report?
Yeah, I used to believe, as a futures trader, that I could trade the market based on the COT report. This is, decades ago. The COT report itself hasn't changed, but the market around futures markets has changed. And the ideal of how hedgers hedge the markets, how they hedge futures markets, or how they hedge commodity markets has changed. A lot of over-the-counter stuff going on, and they might actually trade over the counter and use futures as a hedge, which would be like an inverse hedge to what we normally would think about. So what I kind of do is I look at the COT in terms of, are my speculators raising their open interest? And speculators are the ones who drive our trends. And then I would look for extremes in our commercials, our institutional traders. When their open interest gets at historical levels, that's usually a sign that you're at a market top or a market bottom.
Let's see. What is the back testing evidence that suggests the hangman candle has predictive power, John?
Oh, that's a great question. And I did look that up, and I didn't want to bore you guys with that. Let me see.
You never bore us, John.
Bukowski said that I know, I'm sorry. Where was that?
I'm looking through the next questions, John. So
go through the next question. Okay, here it is. It only works about 40% of the time, but if you get that break of the lower wick, that does shoot up to almost 80%. But again, the projected movement is only around 5 to 8%. And so if we did that based on what we're seeing in front of us, we're probably only going to see somewhere around that 550 level. Okay.
John, any thoughts on either Uber or SMR? Do you look at either of those?
Yeah, well, SMR is in the nuclear space. Actually, I like a lot of other stocks in the nuclear space. Matter of fact, one of the things that you guys, if you're not doing, let me just pause here for a second, is if you're not getting if you go into news here and you're not getting our bar chart brief, if you're not signed up for it, you're missing out on a lot of great information. A lot of times what happens is, Tom and I talk about a lot of different trading ideas, and we don't put all of them up on in our sessions here on Fridays, but a lot of my ideas that don't get used in marketing close go to daily briefs. And one of the ones we just talked about this week was in the nuclear space, which was GEV, which I think is one of the strongest candidates in the nuclear space. The problem I have of worrying about NewScale is that they're still in the development stage, where GEV and Hitachi actually have made some of these nuclear reactors. And what the story was, I think this came out on Monday, is that the Department of Energy is going to give Tennessee Valley Authority $400 million to build a GEV Hitachi reactor. So yes, I do look at SMR. I just like in the nuclear space, a company that is already in that space, is already making these reactors. And that was the one that I picked. So there was a news article earlier this week in the Daily Brief. So what was the other one?
Uber.
No, I'm not really following that one. No, sorry.
Ulta Beauty, John. They had their earnings yesterday, and the stock
I saw that.
What a move! And it's actually hit all-time highs today. So the question, John, is how would you look to trade Ulta in this type of situation, or would you just
I hate chasing markets after they've already made big explosive moves like this. I'm just curious, what would on a higher time frame, what do we see here? So I think on this one, if you wanted to chase this, I would buy a deep in the money call to something around, a delta above 75 if you wanted to play that one out. What I probably would do on this one is let this impulse thrust go and then wait for maybe a little bit of a pullback. Now, in that case, I could break down this weekly candle. Let's say look for a pullback about 50% or in the top 50% of this breakout candle, which would looks to be would line up on the most recent all-time high. So I'd look for a little bit of a pullback in that range, and that would be where I would look to buy it if that's what I wanted to do.
One thing that I'm kind of noticing here, John, is I love the fact that Ulta basically bottomed out on its March earnings report, and if you look after each of the 4 earnings reports, it just continues to trend up and up and up. So it looks like it's turned a corner, and the market is buying whatever this company is selling.
Yeah, I have a funny story. We talk about observing, the world around us. I actually was in the stock a long, long time ago, because when they first just came on the scene, and it was one of these things like we talk about being at the strip mall or the outlet malls, where I remember one time was my wife and daughters went into one of these beauty stores, or I guess it's Ulta Beauty Store, and they were in there for like an hour, and I just kept seeing women going in and out and in and out of the store, and I was like, wow, this store is getting a lot of work. And actually I got into the stock, but that was a long time ago, and I certainly didn't still don't own it anymore either, though.
So we got some feedback, and it's good to get this kind of feedback once in a while, John, because I think there are people in this type of situation. And so this person says that he doesn't understand a lot of the professional lingo that we use on this show. He doesn't understand what a lot of the candles mean, a lot of what the TA means. And I think that's a fair point.
That is.
What I would say is every week on Wednesday, John does a very in-depth webinar, and a lot of these topics have been covered on the webinars, where John really does a deep dive and a very thorough explanation. So if there's things that we talk about that you don't quite follow, highly suggest you go and check out the webinars, and then you'll get a better understanding of what we're talking about here.
Yeah, a lot of technical analysis stuff that we do, and then a lot of explanations about how to use the website to set up particular strategies. 2 weeks ago, we did a cover call session. So yeah.
John, Adobe, is that a stock you look at all?
I have. I know there's a lot of hype around it right now, and somebody, Josh Brown, I think. Josh Brown just put out a buy recommendation on it. What's the symbol on that one? ODB.
ADBE.
ADBE. Oh, there it is. Yeah. The problem with this one is, has this one been getting hammered because of the, you can tell I looked at it because it has one of my favorite templates on it. And I don't know no reason why I was looking at it, to be honest with you. I can't remember, but yeah, that does look very positive, right? I mean, this is kind of a similar story we've seen in a lot of these tech stocks that have had a big correction of recent, and then, right, I don't know, is there an earnings behind this? I don't know. Let's see. Is this one that you look at, brother? No.
I don't. I mean, I've looked at it occasionally, but I don't have a position here. Every time I've looked at it for a potential entry, it just hasn't really caught my interest.
Yeah, so I don't see an earnings date here. For some reason it's not popping up. I'm just curious if it was an earnings pop. But the problem here on this one is that, you got to respect our bar chart technical opinion, and it is a sell. Now, I don't know what the rating is on this, but it looks like it is a high, very high. So you're fighting a lot of bearishness, right? A lot of bearishness in this one. Even trend seekers just today probably just gave us a hold. So I think you got a lot of work in this one before, I would trade this one. If I had anything, I would probably be looking at playing this pop from the short side, taking advantage of that. But
we got a question, John, one of our longtime Premier users. He wants to know, do you ever trade the old stocks, the AT&Ts of the world, the Fords of the world? How do you look at those stocks, and do you still look to trade them?
That's a good question. Yeah, I kind of pick and choose some of those, like what you call like the Dow stocks. But again, I don't really trade those. I think that let's make sure we use the right vernacular, and I will invest in them. I tend to find those as safe investments. In other words, if I feel concerned about what's going on in the market in my investment portfolio, I will look at a lot of those stocks as kind of safe havens. And then, like Johnson & Johnson is one that I when I feel the market's at risk, I like going into Johnson & Johnson. Verizon a long time ago, Verizon, I think was another one of those type of stocks. So, a company that has a pricing power, pays a dividend, right? It's been around for many, many years. That's the kind of way I look at those stocks.
Follow up to Lululemon, John. They have earnings next week on the 11th. So the question is it better to wait until then for an entry?
Yeah, you're paying for volatility right now, right? Depending, especially if you're going to buy calls. So, probably what we're getting is a response in whispered numbers for Lululemon. That's probably, I'm guessing. So, yeah, I think if you were looking for an investment opportunity, let's see what happens after earnings, and then, either get confirmation and confidence, or maybe we get a bit of a pullback on that one.
And that's a great question, because it illustrates the difference in mentality between a trade and an investment. For me,
Right.
Last night I bought for an investment. I'm going to follow Burry. I'm going to hold it for hopefully 2 to 3 years. So I'm not worried about earnings. I doubt Michael Burry is worried about earnings. But John, if you make a short-term trade with a goal target in mind, you might be concerned about it.
Yes, I would be concerned about that. Yes. What I would love to see is the stock pop, right? And then get that price appreciation and then just unwind the whole trade, right?
John, we got a congratulations for you for your Boyle, your nat gas. It's exploded. Would you still be holding Boyle here, John, or would you?
Listen, we're gonna get another reinforcement of cold air next week. There will be 3 days in between where we'll get normal weather, and then another reinforcing cold wave. One of the things about cold air is that it's very dense, and once it moves in, it's very difficult to pop out. But what's one of my favorite adages, Thomas? Remember, bulls and bears make money, and what happens to pigs?
They get slaughtered.
Yeah, and the reason why we have a trade plan is that we need to have a projection and a target, and you can see that we came right to my target. So, yeah, I think this, if you got lucky and you were in this trade, and I did get lucky and I was in this trade, and matter of fact, today I did ring a lot of registers on this one. So, yeah, I still think the story, the narrative, the natural gas is going a lot higher, especially if we continue getting reinforcing weather. But it has moved very far in a very short period of time. And you can see based on the January contract, this wick probed into a very strong level of resistance right here around the 542 level. So, yeah, I did take a little bit of profit, but this did turn out to be a really nice trade. If you guys didn't catch it, and again, this is one that that was in our daily brief one. If you missed out on this trade, I was like, hey, we did fall below our mean, but I said, okay, just wait, be patient, wait, right? Have a trade plan, wait for it to get above that 480. We updated. I said, you could take a long on above 480, but we had 489, which was what we looked here on this show. And I said, you got to wait for that momentum and then buy Boyle. And if you did that, Boyle, I think in terms of my return was like 30% return. So this one was a really nice trade. I was very, very pleased with it. Thank you very much.
It's nice. It's nice to get a pat on the back.
Yeah, especially around Christmas time, because you gotta be able to buy G.I. Joe with the Kung Fu grip, right?
John, we got a question. What is your verdict on Heikin-Ashi candles? I think so. You've done webinars on Heikin-Ashi candles.
Yeah.
I think the question is, do you actually? We know you like to teach Heikin-Ashi, but do you actually use Heikin-Ashi while making your own trading decisions?
Be honest with you, I do not use them. I will on a regular basis. I do, if I have friends that will look at them or tell me something. But what I do like about them, and you can see it here, is it eliminates a lot of the noise. And for somebody who's a nervous trader or is an emotional trader, these charts work really well to help you kind of be patient, let the trend, like grasshopper, let the trend work, right? And you can see on the down here and on these rallies here, the problem with these is that they're not very good for helping managing risk because the values are a little bit off. But you can see here, there's no reason why we should be concerned using this chart that natural gas is going to fall. But there is a risk to the market, right? There's always a risk to the market.
There's a stock, SoFi. SoFi took a beating. Not anything nefarious. They actually did a stock offering. I saw that yesterday after the close. But John, the question for you is, when you put on a trade and it doesn't work, how do you know when to exit that trade? Do you look at any specific things like the 50-day or EMA cross, or what are you looking at?
All trades start with a stop. In other words, I do not enter into a trade until I've already assessed my risk. So how do I assess risk? Well, I can assess risk from a percentage of loss versus the capital that I'm going to put up. Typically, I will not lose more than 1 to 2%, depending on how strong I feel about a trade of my risk capital. That's where I start. Then I start looking at moving averages, swing lows and swing highs, depending on if it's a long or a short. Look at things like our technical analysis, like RSIs and MACDs and our Bollinger Bands and things like that. So all those things are just complementary, but the trade itself is already designed before I actually push that buy button. And that is based on position sizing and the amount of capital that I'm willing to risk for that particular trade. And again, I use a very standard rule, which is like 1%, and that's all I risk. If market goes against me, I'll give you a great example. I bought some straddles. I went long straddles on both the Qs and the S&P. I didn't know which way the market was going to go. I thought for sure it was going to go 5% one way or the other, and it still could do that. But I lost my 1%, so I closed out those trades actually this week as well.
Last question for the day, John, comes from your buddy Jim Van Meerten.
Hey, Jim.
He wants to know, will the S&P 500 hit his year or his beginning of the year target of 7,200?
Well, Jim, I didn't think you had a chance a week ago, but heck yeah. I mean, there is an outside possibility if you think about it. If we get a bit of a breakout here, just a normal breakout here, a small 5% move would put us around right at your number. So I think you got an outside chance, man, especially if Santa Claus comes at the end of the month.
Just for official purposes, my guess was 6717, John. I feel like I'm in the driver's seat on that one, so I'm gonna.
Well, and here you guys are all listening to me, and my guess was like 6,100. So there you go.
You better hope that Japanese yen carry trade unravels.
Yeah, no, I hope not. I hope
all
not.
Right, guys, that is going to do it for today's show. We got to a ton of questions. Unfortunately, we didn't get to all of them. Every week we get more and more questions, which is awesome, John, but it also means we can't quite get to all of them. But guys, let's go through our schedule for December. So, John, next week we're going to be off because I am going to be drinking beer. I won't be coherent enough to do the show, so we're going to take a break next week. We will be back on a special day, Wednesday, December 17th at 12 p.m. Central Standard Time. That market on close is going to take the place of that week's normally scheduled webinar. Mm-hmm. So hopefully that's a bit easier for some of you guys to attend. If not, no worries. It's going to be recorded as it always is. And then on Tuesday, December 30th, we're going to do a special Q&A only market on close. So guys, if you want to participate and come check that out, please send us some questions ahead of time. That way John and I can prepare and we know we have enough demand to actually do that show. So think about what you want to ask and send those into marketonclose@barchart.com.
Marketonclose@barchart.com. Please, we appreciate your questions. There's live questions, but this is a really great opportunity for us to bang out a lot of questions and tackle a lot of subjects. But, I don't want to get caught off guard, and I want to be able to give you a good answer. So, please send those in for that show. And that, again, that date is Tuesday, December 30th. At our regular time? What we doing, Thomas?
I think it's going to be 12 p.m. Central, John.
12 p.m. Central.
We will confirm that for you guys on the December 17th show.
On the December 17th show. Okay, so we're not meeting next week, but in the following week, December 17th is, and that show is going to be again at 12 p.m. Central Time, 1 o'clock Eastern Time, correct?
You got it.
Okay. Folks, I hope you guys enjoyed today's show. I hope you got some alpha out of it. I know that I got some good alpha out of our show last week, and hopefully you did as well. Until next time, best of health, manage your risk, and the good of all trading.